Are you ready?
Ready.
All right, let's go. Kevin here, top 100 financial advisor and best-selling author. We are here to talk about the stock market. We've got to talk about JPMorgan. They announced earnings today and they had some really important comments for the broader economy, not just for their own stock. So in today's video, we're going to talk briefly about JPMorgan and the stock and what's going on with the company, but also talk about what's right around the corner. You already know we're in earnings season. I've been talking about it for quite a while, about how hectic July is going to be and how hectic it has been already. Tomorrow, I can't really say tomorrow's going to be worse, but tomorrow is definitely going to be newsworthy, and we'll get to that as well. So first, let's talk about this headline here. JPMorgan lost 28% in profits, meaning they had some money for Q2 of 2022, or 2021 rather, and then they lost 28% of it this time around. And there was a big reason for this. So they say that they decided to build up their reserves of about $428 million to protect themselves from bad loans. And essentially what that means is, and I think most of us kind of get this, the majority of the money that a bank makes is from loans. That's mortgages, car loans, credit cards, business loans. You get the point. And some of those loans, just by the law of large numbers, some of those loans are going to be bad, and JPMorgan has to cover for that, because if you are depositing your money at JPMorgan, you may need that money back, right? Unlike Celsius. That's a topic for another day. But in either case, JPMorgan has to have a certain amount of reserves. That gets all into the banking system and all that, but they have to have it. So if I have to hold that money in reserves, I can't do anything with it but hold it here because I have to, then that's money that I don't get to go out and loan and make money off of. So that is one of the biggest contributors, they say, as to why they lost that much in profit. In response, the stock was only down about 3.5%, which I think if you lose 28% in profits and you're only down 3.5%, I'll take that. We saw what happened with Netflix. I bring this up all the time, but Netflix lost subscribers for the first time in like a decade, and their stock dropped 20%. Right, so the stock market didn't overreact, at least yet. Didn't overreact to JPMorgan news. Now, what stood out most to me about JPMorgan, and this happens with most banks, so I'm really going to be interested in what happens tomorrow, is that they gave us comments about the broader economy. Because the great thing about a bank, even though it may not be the best investment, is that they know exactly how people are spending money, and they are in tune more than almost anyone about global economics and trade and all that kind of stuff. Because again, they have the data. And if you were to tell me that consumer spending was slowing down and people are not spending money, then I would be concerned. I'd be very, very concerned about a recession. Well, according to JPMorgan, both debit and credit purchases are up, and they're still moving up. Now, part of that is because of inflation. Because if I was spending, let's say, $100 on something and went up to 110 because inflation was 9.1%, then yes, I'm spending more. So that is a part of it. However, spending is still strong. The other side of this is the job market and the unemployment rate. Those are still strong. Unemployment is low. We added more than, I think it was 372,000 jobs last month. So that the job part of this is good. People aren't losing their jobs. People aren't losing their homes. People are still spending. That is a sign of at least a stable economy. It may not be a happy and thriving economy because of inflation, but it's still here. If you were to tell me that those things were moving the opposite direction, I would be red flags. This thing is falling apart. So at this point, right now, that is not the case. Could it be in 2 weeks? Could it be in a few months? That remains to be seen. That's not a prediction I'm going to come out here and make. But as of right now, based on what JPMorgan is saying, that part is good. But that's not the only thing that JPMorgan says. So they highlight some other things that were not going well, and I'll kind of give you those from my notes. So obviously, inflation. We talked about that. I don't think anybody needs a new lesson on inflation, because I feel like we do one every single month. And it is what it is, right? We'll see if it starts to creep down. I think that it should be, and it could. We'll see. But they've also paused their stock buyback plan. Now, that is something that is concerning, because I've said for a while, like, obviously you want to follow the money. You want to put your money into companies that you know that somebody's buying, whether that's the people or the company itself. And I've mentioned this before. Apple is one of the biggest share buybacks out there. That's what they constantly do, and they're, for the most part, with the exception of this year, one of the companies that return the most to investors, and that is a stock that consistently grows. JPMorgan and really the entire financial industry does this as well, but now you have removed a big buyer off of the table. JPMorgan is not going to buy their own shares. Now, if you're an investor of JPMorgan, I would be a little concerned, because if I thought you were putting in, I don't know, I'm just throwing a number out here, 500 million to the stock, and you're not doing that, then my prospects of what I thought the stock was going to go to may not be all that great anymore. We'll see. The other thing is that they had mentioned Ukraine supply chain, and how that is still disrupting the global economic situation, and that is still the case. Like, don't forget that is how we kind of got here today, even though, yes, it's been several months, which technically is not that long, but it is something that's still disruptive. I also mentioned the profit number, negative 28% year over year when we're talking about this particular quarter. That also is not good. This is a sign of what we've been talking about maybe since March or February of this year. Once I realized that banks weren't the best place to be, like we thought they were, because we didn't anticipate the fear of recession. I can't say recession yet, but because I did not anticipate the fear of recession for 2022, the banks haven't been the spot. So I would not invest in banks right now until we have a better picture of how the economy is going to go. Now, the thing you need to circle on your calendar right now is what's going to happen tomorrow. Yes, we've got the Google stock split, but you also have these banks reporting earnings. You've got Wells Fargo, Citi, PNC, BlackRock is a financial company, not necessarily a bank. And you also have, which is not a bank, is United Healthcare. It's also one of the largest companies out there, a company that I view as somewhat of a safe haven in a market like this. Safe haven is not a guarantee that you're going to make a certain amount of money, but healthcare costs are going up, which I don't enjoy. However, insurance they're a health insurance company. They're not going anywhere in any situation. They've done okay. So to this point this year, they announced earnings tomorrow. We'll see how that goes. So just be careful. So there's good and bad. Just like I mentioned in yesterday's video, yes, inflation was bad, but gas prices had come down. Yes, JPMorgan's earnings are bad. Their profits down 28%, but jobs and unemployment is still solid. So we're in a really strange place, and really kind of looking back and forth over the edge and see, are we in a recession? Is everything terrible, or are we okay? And that's kind of where the market is. And if you have looked at the market during the day, you'll start to see that pattern where in the morning things were terrible, it got worse, and then things kind of edged out where I think the Dow Jones was only down by 100%, down by 100 points, and at one point it was down more than 300 points. So the market is going to continue to be, I don't want to use chaotic, let's just use volatile. The market is going to continue to be volatile, and you have to continue being calm and stable. So you already know what I'm going to do on Friday. Because it's Friday, I'm going to sit down, I'm going to look at my charts and choose which companies I'm going to dollar cost average into. That is the plan. It's going to continue to be the plan. You need to make sure that your portfolio matches what is going on in the market, and make sure that you're updating that. I keep saying it because it continues to be important. When I figured out late, but when I figured out that, hey, banks work for me, it's why I got out of companies like Capital One. So I stopped talking about banks here, and we shifted our focus to other places that made more sense. So you want to make sure that you're paying attention, not just to, well, really this. You want to pay attention to what these banks are saying, whether or not you're investing. I don't have JPMorgan. I don't have Citi. I hate Wells Fargo. We can talk about that at a later point. But I don't own any of these companies, but I'm really paying attention because they have insight into how the economy is going and how the whole global financial situation is playing out. And that is going to have the biggest impact on your money in a time like this. So pay attention to it. We'll pull out some news and notes tomorrow, provided that nothing absolutely crazy happens, and then we'll discuss that as well. So those are my thoughts on JPMorgan. Tonight, for our members, I'm going to do, again, I haven't narrowed it down because we'll do it right after this, the top 5 to 10 websites that I use to help me become a better investor. And we're not talking news sites. We are talking about tools, things, resources that you can use, and all of them are free to help you become a better investor. So make sure that you are on the members only. There is a button right below this video. You can use this link right here to join the members only group as well. Make sure it's in the description below. All right, that's it for me. Talk to you later. Bye.